Greenwood Stock Trading with another live recap, market update, hot stocks to watch. How are y'all doing? Today is one of those rare days where we get basically every setup we're looking for. Things go right. Execution, though, is still so important. So I want to walk you through our day, how it started, how it ended, and what we're looking forward to tomorrow. So again, the big play of the day, ISPO. This company started out at $12 today. So right off the bat, we see this as a SPAC IPO type of situation. So again, soar more than 500%. All right, more than 500%. What's going on? Circuit breaker. Now, this is a luxury travel company. Okay, luxury travel company that got brought public with the symbol of ISPO. All right. So what the number one thing we talk about in our keys to trading hot stocks profitably is researching the markets. Right now, SPACs and IPOs are hot right now. So anything that just came out, anything that just went public, the algorithms have picked that up and they are running them into a frenzy. Okay, so ISPO, what else was trying to do it today? NVCT, not too much, but it did make a little noise. But CPTN, now again, last time I saw this was on a stock, it was called WNW. Again, when you're looking at this particular play, okay, you can get in on the first big volume bar. You see that none of these stock, we have no volume pretty much all the way until we get over here, and then all of a sudden out the blue we get 25,000 shares. By that time it's being halted, and then now it goes from a long halt, and they pull all the money out, and here we go, you're stuck. But want to get to the entire complete picture. Now, number one, to my premium members, I want you to understand that nobody trades like me. Okay, I am a mixture of a swing trader, a day trader, a momentum trader, an investor, an options trader, stocks and equities. This is what I do because I've had to adapt in all kinds of market conditions, recessions, bear markets, bull markets, choppy markets, small caps that go crazy for a whole year to small caps that don't move at all for a whole year. Today was the first day that small caps really went off, okay, in like 6 or 7 or 8 months. Okay, so I've adapted the way that I trade. You can't model this because it's my personality, it's years of experience, and it's me waiting for the proper setups. Okay, so again, do your research. What is the big deal right now? IPOs and SPACs are the big deal right now. Why? Because they're getting lots of attention, and these algorithms are picking them up. All right, so looked at that. We looked at ANGH, which was another company that just spiked. Again, we did this actually spiked and settled down, which was pretty interesting. The fact that it went from 14 back down to 11 and then took off again. Okay, for some reason the stocks that have options, a lot of times the momentum does not pick them up. I don't know why, but we know that it would be quite a lot of money if these stocks had options, especially on ISPO. So what's the whole point of this video? The point is for you to see sector rotation. Everything is a trend. Okay, get that through your mind. Everything's a trend. People have tried to continue to hold on to their strategies when they don't realize the trend is over with. EV is over with. Cannabis is over with. OTC is over with. Clean energy is over with. Okay, oil and gas is over with. Not saying they're over with right now, but after those those sectors move on, they move on. Okay, people are still trying to trade based on last year's run, based on the fact that stocks went crazy in February last year. Listen, you have to move on and take what the market gives you. Okay, so again, this is the first day. Now, we wanted to also get into some earnings plays. So FSLY, what happened here? We go from 28 to 19, a big gap down. So again, puts printed big. We got 500%, 700%, 600% on puts. And this is exactly why we buy puts, is because even when companies beat, the CEO is subject to say something that investors don't like. All right. So again, we play earnings. How do we play earnings? Well, I'm going to show you why we play earnings. So on ROKU, all right, ROKU, we get a huge sell-off. Okay, we go from closing yesterday at 163 to closing after hours at 112. All right, it's like a 25% drop. Okay, now how many of these does it take to really print big with your puts? Well, it's not going to happen every time, but we want to get the best percentage possible where we know that we're in a position to catch a big drop. Okay, so right now, what do? We bought 7-cent calls. Okay, I'm telling you, we bought 2 contracts. All right, we bought 2 contracts. All right, 2 contracts, because guess what? We don't need, if we get in the money, if we see it close at 143, all right, close at 144 today. It's $1,300. Okay, so again, what I'm doing is I'm risking. I bought these at 4 cents. I'm risking $4 to get 1,300. How many times do you have to be right for this to pay off? Very few. Okay, now what if I wanted to buy calls? Let's say I buy calls that are close to the money. This is why we play out of the money, because of the risk and reward. So let's just say I'm buying calls. So 3,800. So right now, these were they were 1,400. So these were 1,400. If I buy close to the money, let's just say I buy 148. Let's say I want the stock to pop 148. All of this now, I have lost. I've lost almost my complete premium. You know why? Because guess what? What's 11 minus 11? 0. These are going to be worthless. So if I go ahead and pay a lot just to buy close to the money, which is a higher probability that you get a profit when it's close to the money, but not on earnings. When earnings come, it's unpredictable. If you buy close to the money, you're subject to losing your whole premium. If you buy out of the money, yes, it's a lesser probability, but it's less risk. And guess what? Right now, as it stands, this ROKU is at $113. Okay, so today, if this wasn't after hours, that 7 cents would equal $2.73, or that $7 will equal $273. Okay, for each contract. All right, so this is what I'm trying to get everybody to understand. The philosophy is not to take big risk for big reward. Take a small risk for a big reward. All right. What else is there? DKNG, DraftKings is coming up, and guess what? We have some puts on them as well. So again, we're risking. Actually, these were 1 penny. So we bought 5 or 6, 7, 8 contracts, 1 penny. Okay, and then we bought calls and puts. So we're here just in case it makes a big move to the upside, this is gonna make our day. And then if it doesn't, if it moves to the downside, this is gonna make our day. So we just need volatility. All right. But again, why Roku? Number one. See, I call this. We called this when it was $28. It went to $108. That's 400%. Thank you, God. Then we go all the way to research what we're buying. There's a method to our madness, because a lot of people may look at this and think it's mad, but they didn't think it was mad when we bought puts on Netflix and we got this, and we bought puts on Facebook and we got this right before earnings, and we bought puts on PayPal and we got this. Well, they say, how many times do you have to be right? Once out of 10, once out of 20. See, people that are loading up in the money are losing a fortune when the trade doesn't go your way. And then when it does go your way, if you're already in the money, then the upside is less. Okay, so why not take $10, $40? Again, I've been telling my premium members, start with $50, start with $100, start with $500. Run that up and play with your profits. You don't have to start big, 10K, 20K, 5K, 1K. You don't have to start like that. Options are designed so that you can take a little and turn it into a lot. Okay, a little to a lot, not a lot to a lot, or a lot to more, because what you do with a small amount is the same thing you're going to do with a large amount. Okay, so trade small, trade for the passion, trade for the fun, trade because this is what you want to do, this is what you see yourself doing. Okay, now we got a couple more. Walmart didn't quite get where we wanted to go. We had puts on Walmart just simply because supply chain problems could really weigh on that. So we thought it could drop, but again, we saw a firm. We saw a firm make a big drop. We actually had $45 puts, and we got there. It took a few days, but we got there. Okay, so from 80 all the way to 38, that's well over 50%, because we know the sell algorithm is out there. We know those algorithms are ready to sell the stock off, no matter who you are, no matter how big you are. Okay, so just want to reiterate: take a little, turn it into a lot. We took on one account last week $150, turn it into $1,500, just to show it's possible. Okay, we didn't start with $1,500 and try to turn it into $15,000. Now, if you want to take $150 and turn it to $1,500, then from there you can try to turn $1,500 into $15,000. But now you're playing with their money. You're not playing with your money. Understand? So going from 150 to 15 is a lot better than trying to go from 15 to 0, or 15 to 7, or 15 to wherever. You're going to do the same amount with a small account than with a large account. Sure, you think you have more options. You think that the more positions you get in, but it's all about that one play. It's all about focusing on one play, focusing on getting the proper setup that you're looking for. Okay, so again, we're looking at a few more for tomorrow. ISPO, definitely think that's gonna keep going. It may pull back and run up again, but the future looks bright. Small caps may be back, and if so, then that would be a great thing. So again, the main takeaway: we are playing small to minimize our risk. We can play big whenever you're trading intraday and you can put a stop in. Okay, but when you're in earnings, play small. Take a small amount and turn it into a big amount. Okay, and pay attention to what sectors are running. All right, God bless.